Hello traders, and thank you for joining me in today's webinar. Today is the 24th of March 2025 and this is Mohammed Yaout and I'm the Chief Markets Analyst at PU Prime. Today is the beginning of a new trading week, and first of all let me apologize for the previous week. I ran into some technical issues and for some reason I wasn't actually able to do the webinar on time because the Windows will just update when it wants to update. So it specifically chose the time when I was just starting the webinar and it just ran an update. It took so long. So yeah, maybe we missed the previous week. However, we are back this week again to discuss markets. What do we have on our economic agenda and how could we trade the markets when it comes to technical analysis? Because yeah, maybe this week will be one of the weeks that we can have great moves again in the market. So yeah, let's see those scenarios. What do we expect and how could we trade the markets? Everything will be discussed in this webinar. And first of all, let me start by having a very brief look on the economic agenda here for this whole week. And immediately you will notice something, that today is Monday, the 24th of March, and a lot of PMI numbers, a lot. So you know this, it's the PMI day. So going through the data, you can see that we had, the data coming out from the German economy, as well as the Euro economy, as well as the British economy. So all of the PMI data is out. The PMI data includes the manufacturing, the composite, and as well as the services PMI. And yeah, because it's already out, so I don't want to really discuss those details, too much. However, you can see that it's a little bit mixed. So when it comes, to the Euro data, it's only the manufacturing. It's a little bit better than expected. However, it's still in the, recession zone. It's below 50 points. The same exactly is, in the Euro or the German economy. So the manufacturing sector in Europe is a little bit, getting better. However, the services sector is getting a little bit worse in the expansion zone and so on. So it's a little bit, challenging to understand how the PMI numbers work. However, we are providing the funded account passing services, SMC course. Okay, if you actually can pass a funded challenge, you wouldn't be here marketing for it. So yeah, good luck with your SMC, whatever. The most important thing that we have today is the US PMI data, right? So we have the manufacturing, the composite, and the services. And to be honest, the top one to look for is the manufacturing PMI. The previous reading was 52.7. Of course, expectations are to move lower to 51.9 because at the moment everything is just gloomy, in the US economy. This is because of the tariffs. What we are having a little bit, manufacturing sector will definitely be affected negatively. So yeah, of course, 52.7 was the previous reading. I don't really think that we can exceed this by any means or even come close. And yeah, I stick with the expectations around 51.9% or even lower. When it comes to the services PMI, a slight move higher of 0.2% is expected, which isn't a big deal. However, markets will be totally focusing on the manufacturing PMI. So although Mondays are always, low volatility day because markets are just opening up back after the weekend and so on, usually we don't have high volatility events. However, when it comes to the manufacturing PMI at this specific point in the economy where we are having, threats of tariffs here and there all over the place and so on. So I really believe that markets will be focusing on the manufacturing PMI. My question is how you can avoid fake outs on support and resistance. Wait a minute, because I deleted your message, but I didn't remove you from the webinar. Are you the same person who is just selling an SMC course literally 2 minutes ago and you're asking right now how to avoid fake outs on support and resistance? Because your name is not, new to me. So I feel like I've just read your name like 2 minutes ago, Naveed Ahmad. So you're asking about the fake outs on supports and resistances and how you can avoid them. And you were just selling me or selling us an SMC course to pass the funded trading challenge. Wow. Okay, I'll teach you. I'll teach you how to avoid fake outs on supports and resistances when we are on the charts anyway. So that's for today. That's for Monday. The PMI data, as we said, the manufacturing PMI from the US economy will be on top of the list. Moving forward to Tuesday, the 25th of March, we have the monetary policy meeting minutes from the Bank of Japan and the core CPI. A little bit, let's say it will be important. Building permits, no. Housing price index, FOMC member Williams speaking, no. Not interested. CB consumer confidence, yes, maybe. And of course, it would be again expected to move lower from 98.3 to 94.2. But this is normal because the CB consumer confidence anyway is a volatile indicator. So it wouldn't be, a big difference in my opinion, or it wouldn't have a big, volatility effect on the markets. But CB consumer confidence generally, it is important when it comes to the US economy, and we have the new home sales as well. I wouldn't give so much importance to this. Moving forward to Wednesday, where we have the CPI or the consumer price index from the British economy. No expectations for the monthly figure. When it comes to the yearly figure, a slight move lower to 2.9% is what markets see. And we have the core durable goods orders again from the US economy. To be honest with you, I don't really want to minimize the effect of the economic agenda during this point of time. However, for you to know, there are a lot of, more important things that markets are reacting to at the moment. And on top of that, of course, is the geopolitics and the tariffs threats from Donald Trump. So, of course, markets will react to the economic agenda, but is it the only thing that we will be trading on? No, because we have Trump in the White House. We also have the crude oil inventories, which is the weekly figure anyway in the Kashkari speech. Not so interesting so far. Moving forward to Thursday, GDP. Yes, that's important. That's really important now. GDP for the fourth quarter. And okay, what I'm trying to say here is the fourth quarter GDP might be the last quarter not to be affected by tariff and Trump actions in the White House. So the third quarter was actually 2.3%. The fourth should come around the same. But if the fourth quarter was anything lower, it would be a bearish sentiment generally in the US economy, because the fourth quarter, which was still the last quarter in Joe Biden's administration, and still if the US economy was moving lower, even before the tariffs, before the threats, before anything, this means that, okay, things are not so bullish moving forward in the US economy generally. So that's why I'm telling you that the GDP is important, because it's not just the GDP number. It's not any quarter. It's the last quarter in Biden administration. So let's see how those guys, ended their presidential terms. I mean, the Democrats, and how, moving forward, we will be looking for the GDP in Trump's administration. I think this will be highly important to markets. And we end the week on Friday with a lot of data from the British economy, retail sales, and the GDP. Not interested. However, we have the PCE, inflation from the US economy. So the PCE price index on a yearly basis for February will be announced on Friday of this week, right? The previous one was 2.5, and basically, if you're still asking what is the PCE, it's a better inflation indicator than the CPI, right? This is how the Federal Reserve or the FOMC FOMC likes, to track inflation in the economy through the PCE, basically not through the CPI. On the last GDP, markets didn't move, remain in range. What's your opinion? Fundamental is important or technically? Yeah, I see what you're trying to ask here. So you're asking, or you're saying that on the last GDP report, markets didn't react, which is normal. Not every economic release should have, high volatility. So what's your opinion? Fundamental is important or technical analysis? Market structure follows, I guess, technically. Okay, my personal humble opinion is if I see something on the charts, I will trade it technically. So I try to follow fundamentals because this is part of my job and I love economics and so on. But I trade technical analysis simply because let's say you have many reasons fundamentally for the dollar to be weak, right? So the fair value, let's say, for the dollar index is supposed to be much, much lower than the current value. So this will give you a fundamental view, right? However, when you open the charts, you see that technicals doesn't really support that the dollar will move lower anytime soon. I mean, okay, fundamentals are not wrong and technicals are not wrong, but they are not always aligned with each other. Sometimes, you have a scenario technically that you can basically trade that is not 100%, in alignment with fundamentals and so on. So I trade technicals because fundamentals take time to play out. And I'm not Warren Buffett. I'm not a long-term positional trader. No, I don't care about what will happen next month. Maybe I'm a swing trader, so I do care about what will happen this week. But what will happen this week in the markets doesn't have to be in specific, within the whole picture of how the economics is working out and so on. So fundamentals affect markets 100%. I cannot say no, but does it affect markets now? That's the point, and that's and basically I want to tell you something which is a little bit of philosophical. Fundamentals actually they don't move markets. What move markets are how market participants react to those fundamentals, right? So if you have, I don't know how to explain it because it's a good question. Let's say we all decide right now to buy dollar with all the respect to any fundamentals. It will not play out in the markets, right? Because market participants, we didn't react to those fundamentals. So it's not only about fundamentals, it's also about how we react to those fundamentals and place our bets in the markets. And this is what moves markets. So technically, the technical analysis happens now, happens tomorrow, happens this week. Fundamentals might take time to reflect on markets. How can one integrate? Wait, just a minute. Wait. How can one integrate the fundamental and technical analysis? Why? Why do you want to integrate fundamental and technical analysis? If you trade on the news, which is something I don't basically advise with, yeah, maybe you need to understand how economics work and fundamentals work. So to try to understand how would market participants react to the news as they happen. However, other than that, no. You just understand what's happening generally, fundamentally, okay? And then you try to trade that technically. If not, I just trade technicals. Is it very important to get level 2 data or heat maps? No. I wouldn't say it's very important, but I don't do this personally, Would it be right to say that fundamentals are more important for long-term investing while technical are more for short-term trades? Yes, 100%. 100%, this is correct. If you're a positional trader, let's say I cannot basically, if you ask me how do you see gold will react during 2025, the whole year. If I just open the charts technically, come on, what am I doing? What will happen during the year that might affect gold prices? How are the global economies performing? What is the global inflation doing? Monetary policies and so on. This will definitely affect gold. How are the geopolitics doing and so on? Because I'm giving you a target for the whole year. And this is something personally I cannot do on my own. And that's why you have a lot of investment banks, HSBC, Citigroup, Bank of America, and so on. They publish their expectations for gold price for the year, which a lot of traders, they just, okay, go, come on, HSBC expecting $5,000 next year, and so on. Only after publishing this report with maybe 1, 2, or 3 months, they update it because markets are evolving. So in this case, yes, you should look at fundamentals, but I cannot do this on my own. Okay. On major news like CPI, NFB, GDP, I notice market moves against the news. If dollar becomes weak, gold must go up, but in news times it moves opposite. How can we avoid such manipulation? By avoiding trading the news. This is why I don't trade the news, because yes, there is manipulation. Not always manipulation, but there are sometimes that let's say there is a news event and it's bearish on the dollar index, so the dollar should go lower. Any new trader will say, okay, the news is bearish dollar, I will short the dollar, and only to find out that the dollar is moving higher. Why? Because if this news event was highly anticipated by markets, it's already priced in, it's already there. People already sold the dollar maybe 1 week before because they knew that the news will become bearish and so on. So after actually it comes bearish, they start to close or liquidate their positions moving higher. So we have this buy the news, sell the fact. So it's not manipulation, but it's not that just you expect what will happen on the economic, because come on, the economic agenda is not the economy. This gives you a brief of what is expected to be released, but it's not the economy, it's not the fundamentals. There are a lot of more details. Sometimes it's manipulation, sometimes it's that you don't really understand what's happening, sometimes it's that things are priced in the markets. So trading the news is gambling. This is... May I ask what key financial ratios do prioritize when evaluating a company's long-term growth potential? No, this is a totally different subject. This is a totally different subject. I think we will get a lot, of ratios, PE, price earnings, and so on. So no, I don't have the time right now to do it. Sorry for that. Yes, and they set the stop loss to be break even or totally avoid trading on news. If you want to trade the news, okay, because I can see a lot of you guys are interested on losing their money. If you want to trade the news, you can. However, low risk. I wouldn't say set a stop loss unless you're trading with a really good broker like PU Prime, because even on other brokers, sometimes you would see that you have a stop loss, but during the news, it will not be triggered. Price will just skip your stop loss, which is really bad, or close at a much worse price. So you cannot really trust the stop loss unless you trade with PU Prime, let's say. But personally, I would say just trade very, very low risk and don't expect anything else to happen. Any websites you would suggest where we can get inside news related to dollars? Like if we can know before what news will come for dollars? Tell me you're joking. Tell me you're kidding me right now, because believe me, if I had this website, I wouldn't give it to you, because instead of it being inside news, it wouldn't be inside news, it would be public news. But no. But there is a difference where you actually get your data feed from. So, okay, investing.com will share the, let's say, the news after 10-15 seconds. During those 10-15 seconds, there are more traders out there who are actually using faster sources like Bloomberg, like Reuters, so they get it maybe 10 seconds before you. So maybe they could take an action a little bit earlier. And that's why sometimes, you know, the events or the data releases are not there. However, prices start moving because the big fat Moby, you know, whales, let's say, they are in the markets anyway, and you're a little bit, a couple of seconds behind. However, they do this for a lot of money. They pay a lot of, you know, money to get their subscriptions and so on. I think it's enough for the questions right now. I'm not sure why we have a lot of questions today, but let me discuss technical analysis. And please leave in the comment section below what pairs you would like me to look at. Okay, starting with the dollar index, or should we? Will you recommend trading technically in short term while not ignoring the use? Wait, what? What's your favorite pair? Pound, dollar, gold, Bitcoin, dollar. Okay, pound, dollar. Wait, let me start with gold. Let me start with gold. Well, the short answer for trading gold at the moment is I see bearish. To be honest, I see bearish because after 1, 2, 3, 4, 5, 6 bullish candles, this one was a doji, so we can just disregard it. After 6 bullish candles, we had a small, tiny bearish candle that said maybe we will be moving lower. That was on Thursday. On Friday, this actually confirmed the bearish move, and now it closed bearish. So simple words, very simple, is that where is the high and the low of the previous candle? The low will be 3,000 exactly, and the high will be 3,047. Of course, I know that's a big range, but this is the last daily candle. If we break below the last low, we will definitely continue moving lower, or else we will move higher. So the daily candle doesn't really give me any, or the daily chart doesn't give me any bias, let's say. On the 4-hour time frame, 1, 2, 3, I can see some sort of a price channel here. Is it? Please tell me it's a price channel. Well, it is. It is a price channel. Not only, okay, let me remove this 1 and 2. Now this is more important, and this is a clear price channel because not only it, you know, respects the lower boundaries and the upper boundaries, because guess what? I draw those lines. But in this case, it also respects the middle line. And you can see how many times we touch the middle line. So in this case, yeah, I'm telling you, this is a strong channel. This is a bearish candle, a very bearish candle here, 22. Guys, I'm a little bit bearish on gold. A little bit bearish, but you know, even before closing this webinar, I might be right or wrong, because we are currently trading around the levels of 3,030, right? This is a very clear level of interest and price action, previous support and previous resistance, and we're currently trading around this level, which is a previous resistance, or currently should serve as a resistance, as long or in addition to the upper limit of the price channel, right? So 4-hour time frame, if we close above $3,030, I'm buying. I'm buying this one. Or if we have, you know, a bearish candle here, we might get back again. So to be honest, the make or break level for me at the moment is $3,030, which is currently the price we're trading at. And this can be very much decided during today's PMI manufacturing data from the US. Wait, I love when people know their charts. If you will open daily chart, you will see market rejects from last break of structure. 3005. Do you mean this one? Low? No, that's around 3000 with a long wick. If you're talking about this one, not sure which break of structure you're talking about, but it's an upward move, slight bearish, formation here, and this might be the beginning of a move lower, a retracement, which is something I'm more inclined to believe will happen technically. But again, don't fight, as they say, don't fight the Fed, but in this case, don't fight gold, because it's just moving higher and higher. So it's challenging, to be honest, during the week, but I'll be watching for the levels of $3,030, as we said. A full bullish candle closing above this level will be bullish, or else I'll be selling gold during the week. And the US oil is absolutely really bad at the moment. It's slow because, yeah, this was a clear formation of a bottom here. We are currently trading or forming a new higher high, so I'm bullish. Maybe during the week I'll be looking to move higher to the levels of 70, let's say $70 per barrel. However, it's still risky. It's not a little bit, it's not far anyway, but trading US oil at the moment is risky because what's happening in the Middle East and the geopolitical tensions, US, Yemeni Houthis, what's happening with Iran, and so on. So definitely some sort of effect on global oil prices here to be expected. Well, there was a price channel somewhere on one of the indices in the US markets. I think somewhere around here. Yeah, a little bit like this. But this week, I do really expect the US indices will move higher because it has been moving lower for some time anyway. So let's say this is the NASDAQ 100. It has been moving lower. We formed a low here around the 19,300, and we are starting to move higher. Even the week started with a higher or a gap higher on the US futures. We have this again on the US 500. So let's set targets, right? On the Dow Jones, I'll be looking for 43,250. That's almost 900 pips from here. On the NASDAQ, I'll be looking for 21,000, let's say. That's almost 1,000 pips away. And on the S&P, I will be looking for 5,950. This is a little bit far. Let's say 5,900. So I'm bullish US indices during this week. Okay. The volatility index, which was actually moving higher recently, is again back to moving lower a little bit. So yeah, maybe, I'm just saying maybe, this week will be a risk on sentiment where we will have volatility index moving lower, maybe gold retracing and giving back some of the gains, the crazy gains that we have seen since maybe during the last 10 days, and maybe US indices will start to move higher a little bit again. It's all for just retracement, right? When it comes to the dollar, again, the dollar was moving lower, a little bit of bottom formation here. It seems to me that after the low formed, we are starting to move again higher. So I'm again bullish on the dollar. And yeah, let's say 106.20 is something I'll be personally expecting. Not during the week, might be a little bit far away during the week. 105.75 is my target on the dollar index during the week. This sounds more reasonable. Comes to the euro, I hope you get it. I hope you get the point that markets have been trending during the last 10 days. Or let's say it in another way. From the first 10 days in March, we had a brilliant trending move in markets, right? So we had this downward move on dollar, upward move on euro, upward move on pound, and so on. The following 10 days in March, we were moving sideways. We were doing absolutely nothing. So you can see this here on the dollar. You will again see it on the euro and so on. This week might be the retracement because we have seen great directional moves. We stopped a little bit, and it seems to me that we might be having a week of a retracement during this week. Okay, do you have any questions? I think I'm done. think I'm done. And yeah, for you to know, this is really important. I won't be having the webinar during the next week. So if you actually heard this, please leave it in the comment section, type 1 or type anything, because next week I will not be having this webinar. Because why? Because simply we will be after Ramadan, so we will be enjoying a short vacation for the Eid holidays, Eid al-Fitr. So I won't be seeing you guys next week. However, I will be back on, wait a minute. So today is the 24th. I'll be back on the 31st. No, sorry, the 31st would be Eid. I'll be back on the 7th of April. Okay, so today is the 24th. We have done the session. 31st, I won't be there. We'll be having the holiday, the short holiday for Eid al-Fitr. I'll be back on the 7th of April for one last session before I go for a long vacation till the beginning of May. Because, yeah, it's a personal vacation for almost 3 weeks, 4 weeks. I'm not entirely sure. So, yeah. Thank you, guys. Thank you so much, guys. Thank you. Happy holiday, Eid Mubarak, happy festival. Mabruk. Yeah, thank you. Not entirely sure why you say Mabruk, but okay. Thank you for the great explanation. Thank you so much, guys. So, yeah, please let me know if there are any other questions before ending this session today. I think I'm done. Let me check. Okay. Thank you so much, guys, for attending this webinar. I'll see you guys not the next week, but the one following on the 7th of April. Of course, let me just leave my email again here for you, because whether I am on the webinar or not, if you have any question at any point of time, I've just sent you my personal or my business email. You can just send me an email with any of your questions. I'll be more than happy to assist you at any point of time. So it shouldn't be only on during the webinars. It's anytime. I'm here to support you in your trading journey. Thank you so much, guys. I'll see you later.